What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 22, Tuesday, May 9th, 2023. We made some trades today, so let's get into it. So, coming into the session, my goal from yesterday was to simply not only trade my best setups, but to trade my best setups properly. That's where I went wrong yesterday. So, that was the main thing that I was focusing on today. So let's go ahead and get into our analysis. Let's start right here at 9:30 this morning when the market opened. So you can't see it, it's off to the side, but we were in more of a consolidation range as the market opened, and then we immediately broke out of that range, created a higher low on top of what used to be the resistance level of the range, which now turned into support, which is a common market concept. Once we see that higher low get formed, we should expect prices to move higher, which they did. Now, as prices made this second spike up, we created our second consolidation zone of the day. So I just simply drew the consolidation zone once I saw one touch, two touches, three touches, and then a fourth. Boom, my zone gets drawn and it gets extended over the course of at least the next 2 hours or so. So that zone is actually the reason that led me to trades number 1 through 3. So on 1 through 3, let's take a look at the notes. I went long at the bottom of the zone during an uptrend, and I should have held this trade, because let's zoom in and take a closer look at this. I actually closed the trade out a little bit early because I wasn't quite sure if the zone was gonna hold up, but everything made sense in terms of my trading plan, because my trading plan is, when it comes to trading the range, first thing I want to do is identify the direction that prices were moving in before the range was established. That direction was up. So that tells me that I only want to go long from the bottom of the zone once the zone is drawn. So if I go long at the bottom of the zone, my preferred exit target would be to take prices up to the top and get out of the trade right there at the top level of resistance of the zone. That's what I should do, but I dropped the ball this time because I had opportunities on trades 1, 2, and 3 to get profit at the top of the zone, and I didn't do it. So that's something I need to clean up, because that's a problem that I had yesterday also, where I'm not getting out at the ideal point when it comes to taking zone trades. So I think that's something I got to continue to drill down, and something I have to continue to focus on until I get it right. Gotta trade these zones the right way, because I would say, for me as a trader, a zone is one of my favorite setups, because it's a clearly defined entry and a clearly defined exit, and it's pretty much nothing outside of that. It's one way to get in, one way to get out, based on the way that I trade it. So I want to be able to make the profits that I should on my range bound trades. So let's continue on with our analysis. So after we came to the top of the zone, we created another higher low on top of the zone, the same way that we did from earlier once we broke out of the zone from the pre-market. So once we created that higher low, we moved higher. And actually, let's take some time to address all of these levels on the chart before we go any further. So this blue line up here at 33,686 represents yesterday's closing price, which usually always plays a major role in the next day's session, which will be today, Tuesday, May 9th. So that's what this blue line up here represents. This right here is the zone that we drew after the second higher low was created. And okay, the other zone that I drew is not in this screenshot, so we don't have to discuss that. And also, let's talk about this level of support down here. Now, this level of support is the lowest most level of support that was established in today's session, but it wasn't quite perfect enough, and prices didn't stay down here long enough for me to create a complete zone. So I just created a support line, and I call this entire setup a support line below the zone. So we'll talk about that a little later as we get into exactly how I traded this zone today. So now that we have that out the way and we discussed our levels on the chart, let's continue with our analysis. So after we created this higher low, we pushed past yesterday's closing price, and you would have thought that we pushed past yesterday's closing price after making two higher lows. Okay, we should be in an uptrend for a good amount of time now. Not the case in this scenario. As a matter of fact, they consolidated over these 1, 2, 3, 4 candles, and then they broke back down to the downside, came back to retest yesterday's closing price, but they couldn't find any support at that. They pushed back down into the zone, created a lower high, and then retested the bottom of the zone once more. Now, once they tested that bottom, they actually made their first push, well, their second push actually, their second push down to retest what used to be the extreme level of support from this higher low that got established over here from earlier in the session. So off of the touch from that level, we created a double bottom, and then we continue back up higher to the top of the zone at A. So at A, I actually should have been going short right here, but I missed my trade, and then I hesitated when I had an opportunity to get into it again. I missed that trade from the top to the bottom. That's my ideal setup, but I wasn't able to take it. But then here's where I went wrong. I went wrong on trade 4 because I tried the revenge trade. So I took a revenge trade after missing the short entry at point A, and I shorted the lows of the zone, which is something that I should never do. If I'm short in the zone, I really only want to short from the top unless it's just clear evidence that the breakout is about to happen right here, right now. But that's usually not the case. Most of the time the zone is going to hold up, and for that reason I don't want to short it from the low. I want to short it from the highs and then get out at the lows of the zone. So that's the plan, and right here I just did the complete opposite. I was mad that I missed the trade from A, and I was like, you know what, I'm gonna get in anyway and ride it down all the way back to the lowest support level of the day. So that was my original idea for that trade, but I was just way too early because that move happened. We did eventually come back down and test here. It was just I needed to short from higher prices like I did at 5 and not what I did at 4. So that's just me making a bad decision right there on 4. I can clean that up most definitely. So trade number 5, we come back to the top of the zone, and unlike trade A where I hesitated, on trade 5 I showed extreme discipline, and I was very willing to take the entry right then and there. I'm not waiting. It hit my price, I'm getting in. So that's how I entered the short entry at trade 5. Now this one didn't come back to my profit target. It actually came back to break even, so that's okay. Sometimes it happens like that. But on trade 6, since prices were back up at the top of the zone, I really just didn't think that they would break past this level, mainly because we've already been in a consolidation for a good amount of time during today's session so far up until that point, and we were also stuck in the range all day yesterday. And when you think about it, that kind of makes sense because let's actually look at the news calendar for this week. So on Monday and Tuesday today, so we don't have too much news coming out that's important, but on Wednesday, Thursday, and Friday, that's when the heavy hitter news announcements come out. We have CPI tomorrow at 8:30, which is going to make a huge impact on the market because inflation is really big in the macro environment, and any news that's inflation related will cause a lot of volatility. And then we're going to follow that up on Thursday with the PPI. So CPI is Consumers Price Index. PPI is Producers Price Index. So we have those coming out back to back on Wednesday and Thursday, and then we have sentiment, consumer sentiment, coming out at 10 o'clock on Friday. So it's not guaranteed that the market is going to move for the rest of the week, but it's very likely. So it makes sense that these first 2 days will be range bound days. So having that information available to you and using that, you can use it to have more confidence in taking your range bound trades from the top of a range or from the bottom of a range. So that's pretty much what I was thinking about on trades 5 and 6. So on 6, I didn't believe that prices would break past the level of resistance at the top of the zone, so I shorted right here and actually did the right thing and took prices back down to the bottom of the zone. And I actually added a little contract, not a little contract, just I added one more, actually 2 more contracts to the 2 that I was already trading once prices broke this low at what used to be this previous swing low. And then I took that trade back down to my profit target also, but it wasn't much. I made like an extra maybe 5 or 6 points on it, but that's something I want to work on, just adding to my position when I know that it's already working so I can maximize my gains, but that'll come in due time. So eventually that move from trade 6 at the top of the zone came back down to retest the swing lows that we established earlier in the pre-market at around 9, at around 10, and then around at 10:30. So that's actually the move that I was looking for when it came to trade 4. It just happened a little bit later. So that's another thing when it comes to the market. You can have the right idea about a trade, but you want to make sure that your timing is also right as well, because you could have the right idea and the wrong timing and still be wrong on the trade and lose money. But that's not what we want to do. So timing is very crucial when it comes to trading. So let's talk about trade number 7. So I shorted after a retest of the breakout from the zone. So this is the zone we're talking about right here. Once we broke out, I was assuming that we would come back, retest this, and then once we started pulling away, I went short in expectations that we would come all the way back down to this, either the bottom of this first higher low that we established or the top of this first higher low that we established. But either one of those I felt like was the potential target. And if you look at the trade, we actually did that. If you connect this wick and follow it over, it crosses over just barely with the top of this wick from the top of this swing that we established from earlier in the market. So there, right there, that was my exit. That was my signal to exit, but I ignored it because I just wanted to catch a big move. And let's talk about the reason I actually wanted that big move. Let's go back to yesterday's session. So this is yesterday during the afternoon leading up into the close. These are the last 3 hours. So yesterday we were in a range all day long until we had this spike at A. So we spiked out of the range and had a huge move to the downside. So I'm expecting that today we would see something similar eventually, where prices get back up to the top of the resistance level for that day, and then they just have a completely massive sell-off. And that's what I was trying to catch. But when you have an idea about what you want to trade in the market, like I just talked about, you want to make sure that you have the right timing. So that's really what it came down to for me on trade 7. Instead of taking what the market was giving me and taking small scalps here and there and then catching a big one when it came, it was a lot of trades that I left money on the table that should have been easy profits that I should have locked in. It should have been a trade at A. It should have been 4. I would have took that. That's just a bad decision. 5, that's good. So yeah, I missed out on trades 1 through 3 and on trade 7. So that's just me leaving money on the table unnecessarily. And then at trade 8, I just made a completely bad decision. Pretty much the same decision I made at trade 4, where I'm expecting continuation of the down move, but this really wasn't that type of day. In range bound days like these, you have a higher chance of prices coming back to test the highest price that they can, and then having the short move that you were expecting from whatever prices below. You always want to wait for prices to come back up and short from higher prices. So especially in range bound markets, especially. So that's where I went wrong on trade 8, just being too greedy. Like, sometimes you got to take what's there. You can't force the market to do anything. You can just trade what it gives you. So on trade 9, same decision. I just messed up this entire swing. So when we made this low at 7 and came back up to 10, I just traded this completely wrong. Shorted at 8, shorted at 9, thinking that, oh, okay, it will come back, find resistance here. But look at the notes for 9, because it's interesting. I seriously considered shorting from higher prices on trade 9. I was really thinking about it, like, if I shorted from trade 4 and it didn't work, if I'm shorting here, is it also gonna work? But it was something in my head that said, I mean, if it does work and I don't take it, I'll be mad, right? So I took it anyway, which I shouldn't have, but I should have been patient enough to wait for my ideal price levels to be reached first. So that's what I need to work on. I might have the right idea, but you gotta be patient enough to wait for it to come to fruition. Don't hop in early. Wait for that confirmation. Once you get that confirmation, then you can do your thing. But until then, you gotta be patient and you gotta wait. So big mistakes on trades 8 and trades 9. But on trade 10, I got my mind back right, made the right decisions, shorted from the top of the zone like I've been doing all day. And this time, not only did I hold prices down to the bottom of the zone, I held prices all the way back down to the support level from the extreme on point on trade 4. So I got a little extra on that one to help make up for these losses that I took on 8 and 9. But then I come right back on 11 and do the same dumb trade that I did from 9 and from 4. So clearly I was not learning my lessons today in the market, because there's no reason I should have taken trade 11. Now, trade 4 was wrong. To double back on trade 9, okay, you really messing up. But to come back and do it a third time, like, what am I doing right here? But I can explain why I took that trade. I took that trade because of the idea that I told you guys from before about me expecting to spike all the way out of the range to the downside, just like we did yesterday. So I'm thinking that once we got this short from trade 10, we're coming all the way back to either test the lows at trade 7 or the lows down here from the higher low we established earlier, which we've been trying to aim for all day. The only thing is, once I had a profitable trade, it is not my style of trading to double dip and get back into the same trade. That's just not me, because situations like this happen all the time where you caught that move. You did very well. Now wait for the market to give you another great high probability setup and then you trade. You don't just hop back into the same trade because you think, oh, well, it's going to keep going. No, you had an entry, you had an exit, you did a great job. Move on. So that's the lesson I learned from trades 4, 9, and 11. Have a good trade, take your losses or your profits, whatever it may be, and keep it moving. So then we come back to trade 12. We came back to retest the top of the zone once more. I took the same trade that I've been taking all day, where I took the short trade at the top of the zone. Only problem was I didn't get out at the best possible pricing. And that was because I was still expecting that spike and just trying to catch it, because I had a good feeling that eventually this range is going to break out to the downside just like yesterday. But I squandered the opportunity to take profits where I should have, because, okay, it came to the bottom of the zone here. I didn't take it. Understandable, because I'm waiting for prices to spike. Okay, cool. But then they come here and they give me a second chance to take profits and I don't do it. Okay, now I'm kind of crossing over into risky territory where I'm just being reckless. The market is offering profit and you saying, nah, I'm good. That's not what I'm here for. I want to come into the market, make good trades, and make money off of those trades. That's it. So just me being too greedy, I think, is the overall theme for today's session. So trade 12 was another representation of that. See how we came all the way back up to my break even? And this trade actually lasted way longer than most of my normal trades. Usually I'm in a trade less than 5 minutes, usually 2 to 3 minutes more than likely. So for me to be in a trade for what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, for 16 minutes when I had opportunities to take profits, just not my best trading decision. But what I was looking for all day finally panned out on trade 13. So notice how we got stopped out at break even on trade 12. Now look at this green candle right here. This just looks like a regular strong candle to the upside. But what you don't see is how this candle actually formed. So it opened right here, right on top of support, pushed down really quick, came all the way back down to retest these lows down here. And then it immediately, within probably the next 3 to 4 seconds, got right back into the zone. And within the next 3 to 4 seconds, was right back up at the top again. And this happened super quick. So that's telling you when the market moves that fast, that it's volume coming in. And it's usually a bigger move that's about to happen. So when I see prices come back up, they retest the zone, then they come back down and immediately break through the zone within the next, I know this is a 1 minute candle, but they actually got down here to the bottom of the zone again within the next 10 seconds again. So I said, okay, whole lot of momentum in the market. If I was never stopped out on trade 12, I would have added to my position anyway once we had that big break on high volume past the bottom of the zone right here. So for me, this was a no-brainer, and probably the only time going short at the bottom of the zone where it actually worked. And this is exactly what I mean when I say a range has a tendency to stay within the range until it's a very strong price movement that has enough momentum to actually push prices out of that range and keep it out of that range. So if you look at all of my entries, I tried this move once, 2 times, 3 times, 4 times. So 3 out of 4 times the breakout doesn't work. And on the time where it does work, you'll have to catch such a big trade that you can make up for all of the times that the breakout didn't work if you was trying to aim for trading a breakout rather than aiming for trading the zone. See, that's what I learned over time. I'm better at trading the zone. When I trade the breakout, it usually doesn't work except for a few select times. So 13 was actually one of the few times where it did work. And once I caught that momentum, not only did I take it down to the swing low that we made at 7, but I also took it down to that swing low that we were talking about from earlier, where I expected prices to come back and retest this higher low that we made way earlier in the market when the market first opened. So I got about 40 points on that trade, and that was enough to not only make up for all the losses that I took within trades 5 through 12. I didn't take that many losses. I was ultimately profitable once trade 10 happened. I got back in a profitable territory, and 13 just pushed me over the edge and made it a solid trading day. So overall, I made 22 points a day. I think in a range bound market like this, where I was making so many bad mistakes, I think that's a good number to walk away with. 22 points, I'll take that. So I would say overall, man, my performance, it was okay. Yeah, I closed the day positive. I'm happy for that. But just like I said yesterday, I really want to clean up these zone trades because it's just so simple. It's easy money right there in front of me. But I'm messing it up because I'm making the wrong decisions. My entries most of the time are good. I just need to follow through with every step of my trading. So I need to have a good entry. I need to manage my trade the right way while the trade is open. And then I need to have a great exit when I close out the trade. And if I focus on doing all 3 of those things, I don't have a doubt in my mind that I could come in here and be profitable day in and day out. It's just about the small little details and doing what matters. So that's going to be my goal going into today's back testing session, focusing on really just the little small minute details. That's what I want to focus on when I back test tonight. And today is day 22, so that means tomorrow will be day 23. Now, because news is coming out tomorrow, I'll be on the session earlier than normal. I'll be here at 8:30 sharp in the morning, Eastern Standard Time. So I'll see you guys then. But until that time, you guys take it easy.